As of today, the 21st of July, 2026, Russia's State Duma has officially passed landmark cryptocurrency legislation that fundamentally reshapes how millions of Russian citizens can interact with digital assets. This is not a proposal or a draft. This is law. The bill cleared its final readings in Parliament today, and if President Vladimir Putin signs it, which analysts widely expect, the entire Russian crypto market changes on the 1st of September, 2026. Russia, a nation that for years treated cryptocurrency with deep official suspicion, has now embraced a regulated framework opening Bitcoin purchases to ordinary citizens for the very first time. The question every investor is asking right now is simple: does this $3,800 annual cap protect retail traders, or does it hold them back from genuine wealth-building opportunity? Let us break down every single detail. The headline figure drawing attention worldwide is the annual purchase cap of approximately $3,800, which equals around 350,000 Russian rubles, for non-qualified retail investors. Any ordinary Russian citizen without professional investor status can now buy up to that amount in cryptocurrency per year through regulated platforms. For context, that figure represents roughly 3 months of average wages in Russia's major cities. This cap is deliberately set to allow meaningful participation without exposing less experienced investors to catastrophic losses. Qualified investors, those meeting higher net worth or financial experience thresholds defined in the legislation, face no such limit and may trade freely within the new framework. The law also establishes formal licensing requirements for all cryptocurrency exchanges operating in Russia. Platforms must now register with the state, maintain capital reserves, and submit to ongoing regulatory supervision. Unregulated gray market trading no longer has legal cover. Russia's relationship with cryptocurrency has been deeply turbulent for years. The central bank spent much of the early 2020s pushing for an outright ban on crypto trading, arguing digital assets threatened financial stability and could undermine the ruble. The finance ministry pushed back hard, warning that prohibition would simply drive activity underground and hand the state nothing in tax revenue. That internal battle raged until the invasion of Ukraine in February 2022 added an urgent new dimension. Western sanctions cut Russia off from SWIFT and restricted dollar-denominated transactions, forcing businesses to seek alternative financial channels fast. Cryptocurrency, particularly dollar-pegged stablecoins, filled that gap in practice. By 2025, the Kremlin had shifted decisively toward regulation over prohibition. The law passed today is the product of years of internal argument, representing a hard-won compromise between institutional caution and commercial necessity. For ordinary Russians, today's vote represents genuine legal clarity for the first time. Until now, buying Bitcoin or Ethereum in Russia existed in a murky legal gray zone. People could purchase crypto through foreign exchanges or informal peer-to-peer networks, but there was no domestic framework protecting them if things went wrong. No recourse. No consumer rights. Under the new law, licensed Russian exchanges must maintain capital requirements, provide transparent pricing, and operate under full regulatory supervision. Retail investors gain formal consumer protections they have never had before. However, the $3,800 annual cap is a real and meaningful constraint. Younger, digitally engaged Russians hoping to allocate a significant share of savings to digital assets will find that ceiling limiting. Industry observers in Moscow have described it as a pragmatic starting point that could be revised upward once the central bank has gathered solid data on market behavior and investor outcomes. The Central Bank of Russia emerges from this legislation with substantial new powers it never previously held. It becomes the primary regulator for the entire cryptocurrency market, responsible for authorizing exchanges, setting capital adequacy standards, and monitoring all transactions for money laundering and potential sanctions evasion. This is not a light-touch regime by any measure. The central bank fought hard against cryptocurrency for years, so its appointment as chief regulator reflects a significant political compromise. Crypto gets legal status, but only under close and uncompromising institutional control. For international observers, this raises legitimate questions. A regulator that spent years calling loudly for an outright ban is now responsible for enabling a functioning market. Whether those historical instincts translate into genuine openness, or into a framework that quietly restricts competition and innovation, is something the global industry will watch extremely carefully from September onwards. Perhaps the most geopolitically significant element of the new legislation is its explicit legalization of cryptocurrency for cross-border trade. Since 2022, Western sanctions have cut Russia off from SWIFT and severely restricted access to international banking infrastructure. Cryptocurrency, particularly dollar-pegged stablecoins like USDT, has filled that gap in practice, but it has always operated in a legal gray area with genuine commercial risk attached. Today's law changes that entirely. Russian companies can now legally settle international trade transactions in cryptocurrency, formalizing arrangements that were already happening informally across multiple industries. This matters enormously for Russia's trading partners across Asia, the Middle East, and Africa, many of whom have been using cryptocurrency precisely to avoid sanctions exposure of their own. The legislation brings an established workaround into the formal economy, giving it full state backing and legal enforceability. Bitcoin responded positively to the news earlier today, with prices moving upward as traders interpreted Russia's new regulatory framework as a broadly bullish signal for global crypto adoption. When a major national economy with approximately 145 million citizens formalizes retail access to digital assets, it expands the addressable market in a concrete and measurable way. Even a modest percentage of Russian citizens engaging with regulated platforms represents substantial capital flows over time. Globally, Russia's move adds to a pronounced 2026 trend in which major economies have shifted from outright hostility to structured oversight. The European Union's MiCA regulation came into full effect in early 2025. The United States passed its own comprehensive digital asset framework in late 2025. Russia's law aligns with that global direction, though its statist character, with central bank dominance and retail purchase caps, distinguishes it sharply from Western models. The law now moves to President Putin for signature. Legal analysts in Moscow and international observers alike expect a relatively swift signing, given the bill carries formal support from both the finance ministry and, ultimately, the central bank. If signed in the coming days, the legislation takes effect on the 1st of September, 2026, giving exchanges, regulators, and investors roughly 6 weeks to prepare for a completely new operating environment. Exchanges must apply for and secure licenses. The central bank must publish implementing regulations covering capital requirements, anti-money laundering procedures, and transaction reporting obligations. Retail investors must register on compliant platforms before they can legally purchase any cryptocurrency at all. Industry figures in Russia have privately suggested that full implementation may extend beyond 6 weeks, with a transitional period likely running into late 2026 to accommodate the sheer scale of regulatory build-out required. Russia's crypto law, passed today on the 21st of July, 2026, is a genuine turning point for one of the world's largest economies. It brings legal clarity and meaningful consumer protection to a sector that operated in the shadows for years. The $3,800 annual cap for retail investors is a real constraint, but it is also a pragmatic starting point from a regulator that was demanding a full ban just a few years ago. Whether this framework truly succeeds will depend on how the central bank exercises its sweeping new powers, whether the September deadline holds under the pressure of implementation, and whether ordinary Russians embrace regulated platforms or stick to the informal channels they already trust. One thing is beyond doubt: the global map of cryptocurrency regulation looks different today than it did yesterday. Subscribe now for continuous coverage as this story develops.